Bitcoin's down about 50% from its all-time high. Fear and greed index dropped to 12 recently, deep in extreme fear. Hit an all-time low of 5 back in February. People are terrified. But in the last few weeks, 3 signals have fired at the same time. All 3 have historically appeared at or near every major cycle bottom. This is the first time all 3 have triggered during this cycle. I'm not going to tell you the bottom is in. What I can do is show you exactly what happened every other time these signals appeared and give you my honest take. Let's get into it. On June 4th, Bitcoin fell to about 61,300 and tagged the 200-week moving average for the first time this cycle. This is a roughly 4-year rolling average of Bitcoin's price, so what the price has been on average over 4 years, that has acted as Bitcoin's floor of last resort for over a decade, for really all of Bitcoin's history. Quick history, in 2015, Bitcoin tagged it around $200. That was the bottom, or close to it. In December 2018, it tagged it around 3,200. That was the bottom. In March 2020, during COVID, it touched it near 4,000. Within 18 months, Bitcoin hit a new all-time high. In 2022, things played out differently. Bitcoin broke below the line and spent about 7 months under it before finding its ultimate low near 15,500. So the line held as a zone, not a perfect bounce, for that one exception. Analyst Ben Cohen said it well. This is just what Bitcoin does about every 4 years. Bitcoin has a date with destiny, and destiny is the 200-week moving average. The question now is whether this plays out like 2015 and 2018, or like 22, where we spent months below it. The next 2 signals can help answer that. So the supply in loss exceeds supply in profit. And this comes from Glassnode's on-chain data, and it might be the most important of the 3. As of June 4th, about 10.5 million Bitcoin are held at a loss versus 9.8 million in profit. That means more than half of all Bitcoin that exists is held by people who are underwater right now. That's the first time this has happened in the current cycle. And why that matters is this crossover has appeared at every single major bear market bottom. 2015, 2019, during the March 2020 COVID crash, and in 2022 after FTX. The logic is simple. When most holders are underwater, the people who are going to panic sell have already panic sold. The coins that remain are held by people who can tolerate the pain and would rather wait it out. So you get maximum fear, but declining sell pressure. And that combination is what bottoms are made of. The duration has varied from about a month in 2020 to nearly a whole year in 2015. So the signal tells you you're in the zone, not that the exact day has arrived. Signal number 3, fire sale zone and extreme fear. The third signal is 2 related indicators confirming each other. Bitcoin has dropped into the quote-unquote basically a fire sale zone on the rainbow chart, a logarithmic growth model that maps price against this long-term trend. The last time Bitcoin entered this zone was November 2022 during the FTX collapse. And every time it's traded here, the people who accumulated saw massive returns within 1 to 2 years. At the same time, the fear and greed index has been stuck in extreme fear for months. Like I said before, it hit 12 on June 4th after an all-time low of 5 in February. Never been that low before, for that long. For comparison, during the FTX crash, it dropped to 20, a lot higher than 5 or 12. And that was a much scarier time overall. So it's kind of crazy, right, that somehow, even though there's no legitimate reason to be that scared, the fear index is way lower than it was when the FTX crash happened. During COVID, it hit about 8. So even then, when there was legitimate reason to panic, when there was apocalypse now worldwide practically, even that was a higher fear reading than this February, which higher in this case means less fear. The last time this index showed extreme greed was October 5th, 2025, less than 2 weeks before the all-time high and peak of this cycle. Fire sale on the chart, extreme fear and sentiment, both overlapping with the other 2 signals. That confluence has only happened at major cycle lows. Now, what could go wrong? I have to be honest about what could make this time different. The biggest unknown is ETF flows. U.S. spot Bitcoin ETFs has seen over 5 billion in outflows over the past few weeks. The 30-day average has dropped to negative 2,400 Bitcoin per day or so. That's more than 5 times the daily new supply miners produce after the halving. If those outflows turn from tactical to structural, meaning they persist, then the 2-week moving average may not hold as cleanly as it has in prior cycles. There's also the Fed. Kevin Warsh just held his first FOMC meeting as chair, and the macro environment is tighter than it was at the 2022 bottom. And that's a negative point for sure. So what do I think? I think we're in the late bear market phase, which most people tend to agree with. The big disagreement just comes with whether or not the absolute bottom is in yet, or whether there's another leg lower in the period of time there, and at what level that would be if it does happen. 3 historically reliable signals have all fired at the same time, and that's never happened without a major low forming nearby. Now, nearby could mean this month, could mean it already happened, or it could mean as late as the fourth quarter of this year. But I personally don't think it would be any later than the fourth quarter of this year. And I think it's more likely that the 200-week moving average does hold up and price doesn't go beneath it for a super long period of time like it did in 2022, although even then it was only a matter of months where it bounced around down there. So if that were to happen, just for reference, if we had a repeat of 2022, it could mean that prices go low 50,000s or so and stay there for several months. People calling for 42K and 32K are just completely out of their minds, if you ask me. That's another story. Anyway, getting back to it, drawdowns are getting shallower every cycle. And this is something people like Ben Cohen have talked about a lot. 2014 was 93%, 2018 was 84%, 22 was 77%. We're at about 50% right now. A lot of people are calling for a full 70% drawdown. I don't think that's necessarily what has to happen, like so many people seem to be assuming that that math will just play out despite all other indicators, but whatever. There are structural reasons for that, like ETFs, corporate treasuries, and broader institutional adoption. I still don't think it justifies the full 70%, though. What I wouldn't try to do is time the exact bottom. People who accumulated readily during periods like this in the past were rewarded within 12 to 24 months, and that pattern is held every time. I think it will do so again, although this is not financial advice. The 200-week moving average has been tagged. More than half of all Bitcoin is underwater. The rainbow chart says fire sale. All 3 of these have appeared at every major cycle bottom. Whether this is the exact low or not, the data says we're deep in the zone where bottoms form. And that much we can pretty much say for certain. And again, I don't think anyone in their right minds disagrees with that much. That's a pretty safe claim. Again, it's just about how low does the bottom go and for how long. Everybody's saying if there's an exact repeat of the pattern from past cycles, then it's got to be at least 70% drawdown from the high, which would be about 42,000, and that would come sometime around October. But for that to really play out, you also have to assume that we're going to be deep under the 200-week moving average, right? I mean, 42K is like 20% more, like 30%. Yeah, that's like 30% underneath the 200-week moving average. So to go that low would be unprecedented, and to stay there for a length of time, in my mind, would really require some additional bearish catalyst beyond just a tighter macro environment and the institutional flows. But I guess we'll find out soon enough, no matter what happens. I do believe, the one thing I will say with confidence is that the bottom is coming soon. It's coming within the next 4 or 5 months. I will go on the record of saying that. Those are my key beliefs here. Bottom is coming within 4 months, if it hasn't already formed, which it may have, and the 42K full 70% drawdown is not going to happen. That's just my opinion, but again, when you look at everything in full context, that kind of a drawdown would be unprecedented. In terms of just percentage from the peak, yeah, it would still be shallow by past comparisons in terms of percentage drawdown from the peak. But it's really not that simple, because if you look at it in terms of just the 200-week moving average, it would be the most dramatic bear market in history. And we also didn't have as much of a run up. It was only 8x up from the lows of the previous cycle. So it could be, instead of a 7% reduction in the drawdowns, 84%, 77%, and then assuming 70%, maybe it's less. Maybe it's only 50 or 60%. To me, that would be perfectly reasonable. Of course, everyone out there seems to think that logic doesn't make any sense, and I do get trolled for it sometimes, but honestly, that just makes me think I'm more likely to be right in this case, because the majority is always wrong. Anybody who has paid attention to financial markets of any kind for long enough will tell you that whenever everybody thinks one thing is going to happen, it's pretty rare that that's actually what winds up happening. So I'll just leave it at that. Like and subscribe if this was helpful. Share it with someone who's nervous about their Bitcoin right now. And subscribe to the Hard Money Dispatch newsletter. Link in the description. It's free. Thanks for watching. I'll see you in the next one.